Hi, it's Robert Weinberg, your mortgage advisor and financial coach. I've had a lot of questions recently from first-time buyers that have been asking me about how the pre-approval process works. So I wanted to break down some very important facts about the process so you know exactly what to expect. The first thing is that there's two distinctions I want to discuss here, which is a pre-qualification versus a pre-approval. So most lenders are going to give you a pre-qualification, which is worth no more than the paper that it's printed on. And what that pre-qualification is, they're going to have a conversation with you and they're going to review your credit report. They're going to ask you information about how much money you make, what you have in the bank, how much money you're going to put down on the property. And then based on a conversation, and in most cases reviewing your credit, they're going to issue a pre-qualification letter that's going to tell you how much you're approved for and let your realtors put offers in on your behalf. In this competitive real estate market we're in 2019, a pre-qualification letter is absolutely not going to give you what you need when it comes to buying a home. And the reason is because you want a full pre-approval. A good mortgage advisor is going to give you a full pre-approval, which not only has a conversation with you about what you can afford and what you make and what you're looking to do, but also they're going to validate and verify the information by having you provide some documentation, which we'll talk about here in the next few minutes. So it's very important that you're dealing with a lender that can give you a full pre-approval, not just a pre-qualification lender. And also sellers that are reading your offer, they're going to be much more excited about accepting your offer if they know that you've been fully pre-approved and your documents have been validated versus just going off hearsay on a phone call. Next up is going to be talking about the time frame that you should get pre-approved. If you're someone who has plenty of money put away, a great job with a good income, and excellent credit, then I would recommend you get pre-approved 2 to 4 months before you're ready to buy a home. You probably won't have many issues, so that seems to be a good time frame, 2 to 4 months. But the biggest mistake that I see a lot of first-time buyers make is that they wait until the last minute. Maybe they wait a month or two before they're going to buy a home to get pre-approved. And then there's issues that can't be ironed out in such a short time period. So if you're someone that is iffy about your credit, maybe you've had previous credit issues, maybe you've got some income challenges, whether you're self-employed or have irregular income, in those cases I recommend that you get pre-approved anywhere from 4 to 6 months before you actually want to buy a home. This will give you and your advisor plenty of time to work through the potential issues that may come up, whether it's verifying your income, issues that you need to sort out on your credit, and different tips and techniques that you can use to make the home buying process that much easier. Application questions. So the first step in the pre-approval process is going to be to get with your lender and complete a pre-approval questionnaire. Sometimes you'll be doing this by phone or in their office. Other times they'll be sending you an online secure link where you can fill the information out. So the questions that they're going to ask are going to be, what type of loan are you interested in? Conventional loan, FHA, USDA, etc. This is going to be where having a good mortgage advisor is going to help because they'll be able to point you in the right direction of what type of loan that you'll qualify for. The property information. So typically at the pre-approval stage, the property is going to be to be determined, or TBD, as we say. So you're not going to have an exact property address, but the purpose of the loan is going to be to purchase a property. So that part should be pretty self-explanatory. They're also going to ask you for specific information on you and who's going to be purchasing the property. Your full legal name, your date of birth, your social security number, marital status, and your address history. They're going to need a full 2 years of history on your address. So make sure that you give them not only your current address, but if you've moved in the last 2 years, they're going to need your previous address as well to fill out that 2-year history. Also, your employment information. So this is going to be the name of your employer, your position there, and how long you've been there. And also, they're going to need a full 2-year history on this, so make sure that you have that available if you've been at your current employer less than 2 years. Also, your monthly housing and income information. So they're going to want to know how much are you paying in rent right now, or if you have a mortgage, they're going to want to know how much you're paying in your mortgage payment, and if it includes property taxes and insurance in that payment, as well as the income from your job. So you can either give a factor as far as how much money you make per year on a salary basis, or you can give an hourly factor with the amount of hours. It always helps to have your most recent W-2s from the last few years available so you know what you made for the year, and the breakdown of how much you got from base pay, how much you got from bonuses, commissions, and those type of things as well. And then the assets and liabilities. So this is going to be how much money you have in the bank and in your different retirement accounts and whatnot. both for the down payment on the property as well as just to show strength to the underwriter with your loan application. You'll list all your liabilities and assets on there. Even if we're not going to use those assets for the down payment or closing, it still is helpful to have the information. It'll strengthen your loan application to the underwriter if they know that you've got other assets that are not being used. And then liabilities are going to be all your debts. So you'll want to let your lender know right up front about any major debts that you have: credit card debt, auto loans, student loans, personal loans, etc. And they will typically see these on your credit report as well and import them into your loan application. And then the last thing on the application is going to be declarations. This is going to ask if you have any current lawsuits pending, if you're a U.S. citizen. It's going to ask you if you've had a foreclosure in the last 7 years, along with many other questions that are specific on the loan application. So that'll at least get you started as far as those declarations. The documentation that you're going to want to have ready to go for your lender is going to be, if you're a W-2 employee, your most recent 30 days of pay stubs, 60 days of bank statements, W-2 forms covering the last 2 years, account statements covering 60 days for your retirement accounts and or your bank accounts, and then your driver's license, and if you've been divorced, your divorce paperwork as well. All pages of any divorce decree or child support documentation. If you're self-employed, you're going to want to have 2 years of federal tax returns, including all schedules. Or if you're applying for a non-qualified mortgage, a 12 or 24-month full bank statements for both personal and business, all pages. You're also, much like the W-2 employee, going to want to have all of your asset account statements with all pages for the last 2 months, including retirement accounts, driver's license for identity, and any divorce or child support paperwork that you may have as well. And if you're someone who owns multiple properties or rental properties, you're going to want to always make sure that you have 2 years of your full tax returns available so that they can show the rental income. So once your pre-approval is done, at that point, you're going to go out there with confidence knowing how much you can afford in a property. So that pre-approval is typically going to be good for 120 days or 4 months. So that's going to give you time to go negotiate and put in offers on properties and do the back and forth between you, your realtor, and the seller, and ultimately get an offer accepted. My experience is typically most offers will be accepted within the first 60 to 90 days, if not beforehand, and then you'll close on the property about 30 to 45 days after that contract is put in place. Again, generally speaking. So hopefully this has been a great overview for you of the home pre-approval process. I'm available if you do need someone to help you and guide you through the process. I've done this over 1,000 times in my career now, so I'm more than happy to help. You can reach out to me via social media, or you can contact me directly by phone or text. My office is 860-413-3938. Talk to you soon.